Have you ever wondered how a tax deal can boost the US economy? Let's start at the beginning. A tax deal in its simplest form is an agreement between the government and taxpayers about how much they should pay. But it's much more than that. Tax deals are the lifeblood of economic growth. They provide the government with the revenue it needs to fund public services, and they also encourage investment by offering incentives for businesses to spend and expand. Now there's chatter in the halls of Congress about a new tax deal, a deal that promises to inject a fresh dose of vitality into the US economy. If approved, this could mean more government revenue, more business investment, and ultimately more growth. So buckle up because we are about to take a wild ride into the world of economic policy. Now let's delve into the specifics of this proposed tax deal and what it means for the nation. So, what does this proposed tax deal entail? Let's break it down. At the heart of the proposal are significant changes to tax rates for corporations and the wealthy. The plan is to raise these rates, which is expected to generate a substantial amount of revenue for the government. Now, it might seem like this is a burden being placed on the rich and the corporations. However, the idea here is one of balance. By asking those with more to contribute more, the government believes it can level the playing field and reduce income inequality. This is not a new concept, but its implementation in this proposed tax deal is marked by a certain boldness that is worth noting. But it's not just about increasing tax rates. The proposal also includes revisions to the tax code. These revisions are designed to close loopholes and ensure that everyone is paying their fair share. In this way, the tax deal is not just about generating more revenue, but also about creating a more equitable tax system. The potential impacts on the deficit are also a critical part of this conversation. If the proposed tax deal is successful in generating more revenue, it could help to reduce the deficit. That said, any change to the tax code is likely to have a complex mix of effects. And it's important to keep in mind that these projections are just that, projections. The overall aim of these changes is to stimulate economic growth. By generating more revenue for the government, the hope is that the government will have more resources to invest in things like infrastructure, education, and healthcare. These investments in turn could stimulate the economy and lead to more robust and sustainable growth. While the proposed tax deal has many potential benefits, it also comes with a set of challenges. Stay tuned as we delve into these challenges and explore the criticisms of this groundbreaking proposal in the next segment. Every tax deal has its critics. What are the concerns surrounding this one? Just as every coin has two sides, so too does this proposed tax deal. The potential challenges and criticisms are as diverse as they are significant. One of the most prominent concerns is the increased deficit spending. Critics argue that this tax deal, while seemingly beneficial in the short term, could exacerbate the national debt in the long run. They worry that the temporary economic boost might not be worth the potential long-term fiscal instability. Then there's the potential impact on small businesses. While this tax deal is designed to stimulate the economy, some fear it could inadvertently hurt the little guy. The concern is that larger corporations might reap the benefits, while smaller businesses, lacking the resources to navigate the complexities of the new tax code, could be left in the dust. The worry is that the gap between the Davids and the Goliaths of the business world might widen further. Debates over fairness and wealth distribution also loom large in the discussion surrounding this tax deal. Questions are being raised about who really stands to benefit from these changes. Are we looking at a situation where the rich get richer, while the middle and lower income groups see little to no improvement? Critics argue that a truly beneficial tax deal should promote wealth distribution that lifts all boats, not just the yachts. These challenges could significantly impact the passage of the tax deal in Congress. Every representative and senator will have to weigh these criticisms against the potential benefits. They'll have to consider the voices of their constituents, the fiscal health of the nation, and the long-term impacts on businesses both large and small. But let's not lose sight of the potential positives. Regardless of these challenges, the potential economic boost from this tax deal cannot be ignored. In the next scene, we'll dive deeper into this potential impact. Stay tuned. The potential economic impact of this tax deal is significant. What could this mean for the US? Let's delve into the details. The proposed tax deal, if approved, could act as a catalyst for economic growth. By adjusting the tax brackets and reducing the corporate tax rate, the deal is poised to stimulate business investment and consumer spending. This stimulus could in turn spur economic activity, leading to an overall increase in the gross domestic product or GDP. In essence, the tax deal could set the stage for a more robust and vibrant economy. Additionally, the tax deal has the potential to increase government revenue. While it may seem counterintuitive that lower tax rates could lead to higher revenue, the concept is rooted in the Laffer curve theory. This economic theory suggests that there is an optimal tax rate that maximizes government revenue. By reducing tax rates, the proposed deal aims to hit this sweet spot, encouraging more businesses to invest and expand, and more individuals to spend. The result? A potential increase in tax revenue. The enhanced revenue could also help in reducing the deficit. As the government collects more taxes, it could use this increased revenue to pay down existing debt, thereby reducing the deficit. This aspect is particularly crucial given the current economic climate and the significant debt levels that the US is grappling with. But the potential benefits of the tax deal aren't limited to macroeconomic factors. On a micro level, businesses could benefit from lower tax rates, which could free up resources for investment and expansion. Meanwhile, individuals might see an increase in their disposable income, which could lead to an improvement in their standard of living. While the final decision rests with Congress, the potential economic boost from this tax deal is undeniable. Stay tuned to see how this story unfolds.